Hi guys, today we are going to be talking about resistance within the foreign exchange. Primarily what it is, how you can draw it out, how you determine where the resistance actually is within the market, why it's important, and of course we will do a little bit of live trading at the end just to show you how I, as a professional trader, will actually use resistance to my advantage. So first, let's go over what resistance actually is. So resistance within the market is much like a ceiling. That's what traders usually refer it to. So when you come against resistance, what is it? It's like even trying to push a bookcase. Push something that's very heavy, a massive stone block. You come up against a lot of resistance because you were trying to push it, but it is just not moving because of its weight. Or something along those lines, right? Even the ceiling, every time you touch it or you try to go through it, your resistance above you is plasterboard, wood, brick, whatever it is. Very hard to break through, and that's what it is within the market. So if I draw this line out here, in fact, let's go for a better example. Here we go. If I to use this trend line here, and I use all the tops, we can see that every time the market comes up to this area, this high right here, falls down. Comes back up again, falls down. Comes back up again, falls down. So if you've watched the support episode, or this is the first one, they're going to be very closely linked, I should say that. But it is important that you know both of them. So even though you might have watched one video of the other, make sure you still watch the entirety of this video. So, as we can see, resistance, I should be saying, is when the market hits a certain point, finds resistance, it can't go past it, and it comes back down again. And we find that here. It comes up to a certain point, can't break through this line, comes down, can't break through this line, comes down, can't break through this line. And what you'll also realize is that I have drawn these lines linking all the tops, all the highs of the market. That is how you determine where resistance is. Really simple. We use a trend line. That's what I've done here. Apart from, I've just drawn an arrow. Let's go all the way from the start. You draw your trend line, you go, okay, well, where's the resistance in the market? Well, I find the initial high, the highest point, which is obviously just here. And then I basically try and link all the highs, but without breaking them through. See, if I draw this, note that this high and this high, something if I do it like this, and we do this high here and this high here, they've broken through the line. We do not want that. We do not want breakthroughs. These wicks, which are these simple lines here, they can break through. That's absolutely fine. So if we did something like this, and I could even do something like this, wick, wick, hitting a wick, I could even do something along these lines, where the candlesticks are closing on basically all of these lines here. And look, even if I extend this line out, the resistance continues, because look what happens. It comes up, hits this line, comes up, hits this line, comes up, hits this line, and obviously it moves around, comes up, hit this line, until it breaks through over here. But then we can also see that we have resistance from here as well. So we go from the lowest point now all the way up to the top. But this is not a good example. Now, why is that? Because this is broken through. Now, we can have small breakthroughs, but it's really not wanted, because that means that if the line does break through, this resistance isn't that strong. Because instead of it being like here, where it can't break through on any of them, all four tops, it can just wick through it, this one clearly has broken through. So there are levels of strength of resistance. If it breaks through, I'd be saying to myself, well, that resistance line just isn't that strong. It's just not that strong. So I can't move this and say, oh, that's the resistance line. Because look, this high here is way too far away. Even if I extended it out and did this, way too far away. We basically need less than 10 pips to the line to consider it a good touch. that's 22 pips. It's not something that we want to get involved in, right? So there are degrees of how tough, how strong these resistance lines can be. Let's go over another example, because we've obviously done a bearish example here. The market's been going down. Let's do a bullish example, and let me just get rid of this. You can see that I've been trading. Okay, bullish example here. Here's a really good example. So we go from the lowest high, which we could even say is here, and we're going to go all the way to the top. Now, although it does miss some highs, look at this. From the top of this to here, only 3.8 pips. Only 3.8 pips. So we are going to consider that a definite touch. So we would have 1 test, 2 test, 3 test, 4 tests. Right? So that is how you determine where resistance is within the market. First of all, we look at all the highs, we're joining them. Are any of the, I guess, lines breaking through? No. We could even do something like this to make it a little bit closer. That's pretty simple. We could do even that and say, oh, well, that's actually way closer. That's probably a better way to draw it, right? Because this one's even closer now. And it's the exact same principle. What happens? Is it breaking through? No. So we've got a really strong line. Sometimes it's not even going all the way up. Then it comes up here, and look what happens. It falls down. So it's doing everything that resistance line should. The market action, the price action comes up, rejects off, comes up, rejects off, comes up, rejects off, and so on and so forth. So that is what resistance is, guys. It is a point in the market that pushes the market and price action back down. How do we determine this? We use a trend line, linking all the tops together, but making sure there is not a breakthrough. Because remember, if there is a breakthrough, even if it's a little one, that trend line is just not that strong. And that is very important to remember, because that's going to help you a lot when you are trading. So let's go through a few examples. I'm going to go over a few different currency pairs here, and we'll see how I would actually use them in a live trading scenario. So say I go to Australian dollar against the Japanese yen, right? We go to current price action as of time of this recording. Perfect. This is fantastic. Now, why is that? Because I could do something like this, right? Remember the 10 pip rule. Remember the 10 pip rule. 4.5 pips there. So that's definitely a touch. This probably is not going to be. Oh, in fact, it is. 8 pips there. So how many touches do we actually have? 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Obviously not in order, but there we go. So many touches. What happens in terms of price action? Comes up, it's there. Comes up, it's there. Up, down, up, down, up, down. And hopefully it will continue to go up. So say we go back, for example, and we come over here. Say this is exactly where price action is at this very moment. How would I use it? I'd be looking and saying, well, it's coming back down. It's basically touched the line. As soon as that happens, what happens? Because it's 10 pips close to the line, I could say as soon as it gets, well, within 10 pips of the line, that's a good touch for me. And I might just put my stop loss underneath. Now, quick disclaimer, this is not an actual trade. I am just going through what hypothetically I'd be doing in this scenario. Should you go out and do this straight away without looking at all the lessons, without having some prior consultation? No. Obviously, watch all the lessons, look at everything, ask questions if you need to. That will be the best way forwards. So, say I'm even just going to aim for a simple 2%. Now, we already know that's going to happen, but, for example, it comes up and it shoots through, and then you make that. But you could have done the exact same thing over here, because you know it's 10 pips closer. So as soon as it gets there, you could be saying, okay, awesome, this is where 10 pips is. I'm going to put my stop loss underneath here again, and maybe I'll aim for that 2% again. And you get it, right? So by knowing where the resistance is in the market, that's where you can hop in. Obviously, we'd be looking at something along these lines though for resistance, where we'd be looking at falling away, where the market is going to drop down. And it's the exact same principle. So instead we'd come up here, because it's wicked through, that's perfect. I can put my stop loss here. I can take this all the way down to here, and we could say, oh, that's 3.86 right there. And it's the exact same thing up here as well. We could see that the market right here is falling down again. You could even make 13% on that hypothetically. That is what we would be looking at, right? So even if we go down to CAD JPY with the current price action which is going on right now, this is what's happening. Is it the best line to draw? No. So would I be getting into the market? Probably not. You could draw something along these lines, because this has already finished its move, come back up to the highest point, and now it's falling down. And because it came so close to the line, you could be saying, oh, well, you know, this is where I would have liked to hop in on the line. I could put my stop loss anywhere I want, and that's what I'd be looking at. Even if we go to another pair over here, current price action from the initial high over here all the way up to here, we can see that it comes definitely within the 10 pip, right, that we were talking about before. Oh, 17. Apologies, guys. That's 24 pips right there. This is a highly volatile pair, though, so this moves a lot faster in terms of pips. That's something that we can discuss in a different lesson, but let's say that's not a touch, that's not a retest here. We could definitely say right here, definitely say right here. There's one or two touches. If it came back up to the line, again, you could hop in and then fall back down. So let's do a really quick recap on USD CAD, for example, or even Great British Pound. That's a better one. We go from this initial high here, we take it all the way up to the top, right? And we could say, okay, perfect. All I'd like to do is measure, is it 10 pips away? No, it's too far away for that one. Again, is it 10 pips away? No, it's too far away from that one. Is this going to be 10 pips away? Yeah, it's really close. So it's 10 pips away exactly. So then I could say, how many times has it touched? I would be looking at 1, 2, 3. And even when it's not 10 pips away, we can still see that it comes up fairly close, falls down. Fairly close, like kind of falls down here. So what would I be looking at? If I extend this line somewhere up here, like so, I'd be waiting for it to come up here, and then I would hop in for a sell. So all I did there was basically join all the all it does, and however it acts, is literally to basically come up, fall down, come up, fall down, come up, fall back down. And we can see it time and time again, even if going to Euro USD. If we just swap this around here, what can we see? We can see that every time it comes up, it falls down again, breaks the cardinal rule of breaking through. But just for this example, it would be the same thing. When it comes up, I go in for a sell. When it comes up, I go in for a sell. And even all the way over here from this initial one. Look at this. You could have hopped in 1, 2, 3, 4 times for a sell. Made a load of money there. Made a load of money there. Made money there. And so on and so forth. So by knowing what resistance is, drawing it out, determining it, I can then start to hop into the market and use it to my advantage. Now, hopefully that has been quite an educational lesson. You can understand. Remember, go over the support lesson as well. I briefly touched on it before, but definitely go back and look at that, because when you can combine the two together, support and resistance, you'll be able to make a lot more sense of what's going on in the market and a lot greater detail when you will be able to trade. Again, if you have any questions, leave a comment, send an email, however best suits you. But look at these lessons 1, 2, 3 times. Take notes, ask questions if need be, and you will be able to succeed within the foreign exchange. Anyway, guys, my name's Alex, I've been your host, and I cannot wait to see you in the next lesson. Bye, guys.